Alright, mate. So let's have a look here. You sent this yesterday at 9 p.m. I kind of had visitors and then I was in bed. I was talking about a 3-day apex here. Now, what do you call it? Alpha did move up in a 3-day apex yesterday, a 50% bounce. Now, I did buy some Diego, and that has, I'm not saying it's failed yet, but it was attempting to break up and it didn't do that yet. So definitely do need to be careful. God, it's a crazy chart, really, to be fair. Look at the distance between the what's that, 10 cent, the red 200 and down here. It needs a 5x to even get to here, which is yeah, that's pretty crazy. I remember when this first came out, everybody had high hopes for it, and then obviously, I suppose this pattern here, this base here broke down, and that kind of ended all hopes and dreams for this coin at that point, at least. Now, normally when this is forming an apex like this, this will break away. This will break away and come down very quick into price, and this will come along and go slow along here, kind of like that. So, like, I mean, the safe time to be buying into an apex in a way is when you recapture that moving average, or you could start when you recapture the white 100. Buying below these, you know, they do add more risk to the trade because there's always the chance that these could roll over and see new lows, for example. Very nice oversold here, but of course, you know, they flashed in here as well. I mean, there was decent bounces in there. This was in the breakdown, in the Luna breakdown right here. That'll be last May. It is last May. That's the Luna breakdown, so it did flash some early ones here. I suppose these weren't bad, but they're not great either. You would still be sitting on a loss, but they're not too bad. But that's the problem when you're in strong bear markets. Things can remain oversold for a long period of time. These ones were fantastic because you'd already put in a base, and then that would be something to look out for in the future. When you do break down and start putting in a base and you manage to get an oversold in there, here, that could be a sign that it might want to start to move up. This one here, beautiful right down here. That was very nice, actually. But anyway, 3-day. Let's move to a 9-week. We have 7 days, 8 days to a 9 week, 7 days left, 1 week left. This is very nice here. This is you know, it's basically exactly what you kind of want to see. This is a bullish engulfing. This, in theory, should be bullish consolidation. Like you've now negated. I mean, this previous candle, you've kind of dropped down below the first low in a way. Well, here, I mean, that was a crash, and then you're getting these smaller candles. Let's go to the daily, actually, just to have a look at that, just to see what way that formed. Yeah, I mean, is that the first major low right in here? You could have an argument that is the first major low. The other argument is it is down here, because a market is never going to bottom after such a sharp, steep drop here. The market is never going to bottom there. So you're always going to kind of move down to the first major low. So I would have to say I think this is the first major low in the market, implying that if it ever gets down here, that's a great place to be buying for the possible all season whenever that happens. But for now, you know, we have a new 9-week candle. This is pretty good though. Like, there is nothing wrong with this at all, and it is a type of a pattern that could see more upside. As you talked about, we're kind of into that 3-day apex. If there was a bit of a wick down here into there and somehow could hold and flip green, this has a possibility of moving higher again. It is a bullish pattern in theory. Of course, bullish patterns can fail, but you know, it is not bad. Now, this is slightly looking more bearish on the monthly, which is interesting because it's the same as Diego. Actually, Diego tried to flip yesterday and it failed. You know, I kind of jumped on probably a little bit early, but like I already hold Diego and I'm already up. I'm not too sure. Maybe I was up 20% or something. So I kind of felt that I had a bit of a buffer to be attempting to get on board. But I tried to flip green yesterday, and we can look at it now in a minute, actually. but you know, it had this, look at this bearish monthly stop hunt here, and that is still flipping red. So there's a new month tomorrow, so the ideal way would be to trade a new month, and to be fair, you know, one way to be doing it would be to look for a bullish stop hunt below here. If that stop hunts and gets back inside, well, then you know you can manage your risk. You know exactly where to buy, or where to put your stop loss, sorry. Because if you buy right now, well, where do you put your stop? I mean, you could use it down here, but you know, there's not very many monthly candles that will have no wick to the downside. These, as you can see, all had wicks. What's the chances of one opening up and having zero wick here? So the likelihood is there will be some downside on a new month, even if we are bullish. So you can see here, see this was a bearish stop hunt here, right? It's kind of the same sort of bearish setup that we have. If you can see that there, look at this. You're in a range, right? You take liquidity above here. You have a bearish monthly stop hunt. You flip red and you start dropping. Now this is the identical pattern, but it did not continue to drop. Maybe it didn't have time to drop, but we took liquidity above there. In that wick, in here, we flip red, bearish monthly stop hunt, and we're there. So definitely always need to be careful in case this is a continuation month to the downside. If you pretend that's red, so that's the worry, that this is a bark back down, a little bit like what this done. You know, this failed away. So that's why I'm saying, you know, to manage your risk, it would be nice to see a bullish stop hunt down here. And I think that's probably the way to play it. I mean, you only want to be long, really, if you're starting to flip green on the month, right? If you're red on the month, well, you know, the safe thing would be to not be trading it. And as I mentioned, you know, the perfect probably place to be buying would be down below there, because that would be below the first major low. So I don't know if we'll get there or not. I mean, TLM has been one of the weaker coins. I don't know if I should say that. I was going to measure that, but I don't know where the real action is without getting into the smaller time frames. I'll just have a quick look here just on that wick. But you can see even from that wick alone, it's still down 98%. Actually, maybe I'll just check that because that's crazy. Is that the real action? Yeah, it kind of looks like the real action. But, you know, that'll not affect things much. Anyway, it's still down 98% at this point in time. So, you know, 98% down is definitely a fairly decent point to be accumulating. And be willing to down cost average, DCA down. I will say on the daily as well, you can see here on the daily that this is not a great setup, because the white 100 moving average is above price now and curling over. So it means that it may take time for this to develop into a better moving average structure where it can curl around again, and then price can get safely back above it up here, for example. So this moving average is not great, right? It kind of implies that this needs more time to develop in its structure. May mean more chop or even a drop. So yeah, I don't want to keep this video going, but although this is sitting here, the 3-day apex is trying. The distance between it, I think, is probably too much now. It probably needs some time to develop in this structure before, as this gets closer, then it might have more of an attempt to try and move into it. At this point, it feels like it needs more work.